Hey, good morning, everybody, or good day, depending on where you're at. This is Rob. I'm with obviously Trade ATS software, and we're looking forward to our webinar this morning. And to get us started, Shane's going to do it. But before we get into the volatility report and kicking off, can somebody give me a sound check just to make sure you can hear me? All right, thank you, Randy. You're always quick on the draw there. As I said, we've got an agenda this morning. I'm going to go over that with you briefly, but before we do, what I'd like you to make a couple announcements. One is that this webinar is for questions, and if you have a question, put it in the question box there. But the webinar is focused on doing live reviews of currencies that you might have a question about. So if you do have a currency that you would like to have reviewed with a top-down analysis or basically reviewed relative to the way that you're trading, make sure you give us a larger time frame that you're using for your directional bias, as well as your entry time frame or the smaller time frame you're looking for an entry. So make sure you do that, as well as if you have a technical question having to do with the software, anything like that, we'd like to get those questions sent to support@tradeats.com, support@tradeats.com, and they can help you out with any kind of questions there. So I think that's everything we needed to go over. So what we're going to be doing, as usual, Shane's going to be going over that volatility report we sent out yesterday, as well as he's got a special program for you of going over the master pattern. We seem to get a lot of questions about that over and over. So he's going to be reviewing the master pattern, and we look forward to getting that. So Shane, why don't you go ahead and take it away?
All right, thank you. I'm going to go ahead and unpause my screen. So we're going to go through the volatility report real quick. I don't think we'll be spending too much time on this. And then, as you mentioned, we're going to be doing a little bit more training on the master pattern and just finding the origination point. So we've got a few, or I took a few notes on some pairs that we're going to be looking at. So we'll just go through, find the origination point and just go a little bit more in depth in that. And just let you know, we're going to be kind of vetting out some of your questions. So we're planning on making a more defined video about defining the master pattern, but we just want to make sure that, through your guys' feedback that we're going to, be addressing all the right questions. So anyways, on the volatility report, we've got Aussie dollar, and we mentioned that it is starting up kind of its own master pattern on the daily chart. So we'll go ahead and spend a second looking at that. So pretty straightforward. We had an expand low out of the box, now expand high, which that lets us know that something's going on right here. So we want to see if price starts creeping down to the short side, gets under the expansion line that we need to be on the lookout for an expand low to get through this level, through this price point right here, the prominent low. And then the second one is dollar CAD. Now this is the one that I wanted to spend a little bit more time on. So it was an update. We actually had dollar CAD last week where it was starting its own expansion, or excuse me, master pattern. So we had an expand low and then an expand high, and now we're going through kind of dealing with the second phase of that, which is back to expand low. So we, as of the screenshot that was taken for the expand low, or sorry, real quick, is everyone having any trouble hearing me? I'm getting a few comments here that the audio is a little bit chopped up. Could I just get a Y if you can hear me all right? Okay, so it looks like the majority can hear me all right. So for those of you that maybe it's got a little bit of a lag or something, I think it might be on your end in this case. Anyways, so dollar CAD, let's go ahead and jump over into that pair right now. Okay, so kind of we're going to get into this a little bit more, but you know, a lot of you will ask, you know, about price settling and what does that look like. It's starting to take shape a little bit right here. You know, we're still pretty in the early stages of it, but master pattern, when that reveals itself, it's when you have a new box detached from an old range. So it's the beginning of a new range, and we have an expand low, expand high, and then the series of progression is expand low, expand high, and it starts the whipsaw that pushes the lows and highs right up until price settles off of that original expansion line coming out of that box that started the whole process. So in that case, that would be this expansion line. All right, so that is pretty much all I'm going to spend on the volatility report. So let's go through some of the training that I had in mind here. So the first pair that I'm going to be jumping into is dollar franc. So I actually placed a trade because I saw some of the master pattern playing out here. And again, this is just for illustration purposes. You know, kind of leading up. It was about 30 minutes ago. I was just clicking through pairs that look like they might be, you know, a good thing to take a little bit of time looking at. So on this one, we've got dollar franc. We had a big push to the short side, and then prices coming up. It looked like it was going through a little bit of a breath right here. So, you know, if we pushed down, we broke through this prior low, and you know, on the 15-minute, it looks like we started a new range. So let's kind of get into how I was able to decide to test an entry right here. So the first step of master pattern is figuring out where the origination point is. So the way that I like to do that is you have a box with an expand low out of it, a box in a new range where we had an expand low and then an expand high. So that means right there can be a potential origination point. So we had expand low, expand high above it, although price kept on going, and it did an expand high all the way to up here. Now the next progression would be an expand low. So that took out the low point back here. So that could be an opportunity to test an entry. Are there any questions about how to define the expand low point? Just give it 1 second. So as far as defining where a new range starts, let's go back in time a little bit. So we had a, you know, if we look at our 4-hour chart, we can see that price moved down. We had actually a master pattern play out up here where we had an expand low, expand high. So the way that I like to also figure these origination points is an expand low, expand high, and there are no new contractions in between that happening. So a fresh box, expand low, expand high, or vice versa, and no boxes take place in between that. So let's find an example of one that does not fit that criteria. That would be that one does fit it. Sorry guys, this is a little bit off the cuff trying to do this live. This is why it's always a lot better to do it on a pre-planned video and everything. But again, we want to kind of field out some of your questions so we can make the real video that gets added to the course as good as possible. Here's a good question from David. How do you know it's an expand low? So expand low is when it's taking out, expand low would be moving through the bottom of the box, and expand high would be moving through the top of the box. And then after that, it would be expanding past the previous low and then expanding past the previous high. And then settling would be price stopping at the expansion line or reacting to the expansion line and then finally moving in trend. All right, I'm getting some folks telling me that this is lagging a little bit, so I'm going to try and slow down a little bit, slow down my cursor a bit. Okay, so let's go back over to the 15-minute just to go through this. So we had a new range. As through here, price is slowly moving to the short side on this 15-minute chart. And then it comes and we have a new boxes that are clustered together. So boxes that are clustered together. And then out of that box in a new range, we have an expand low and an expand high. That tells you that we've got a new origination point because we had an expand low, expand high. The other option of what can happen sometimes is you have a new box in a new range, but we don't have the expand low, expand high. It just bounces off of the expansion line and continues pushing like we had in the push leading up to that new range here on the 15-minute. So expand low, expand high, we took out some liquidity, and then once it stops, starts stalling out, and then it comes back down and we have the expand low. So it broke through the low of the previous expand low. I know it gets a little bit confusing. So then you can align your trade with that expand low point and manage your risk off of that low. So again, this is just one example of one that I was looking through for illustration purposes. So I'm going to go through a few pairs and we'll see if we can't go through more of them just to kind of expand on this idea and show a few more examples. So that was dollar franc. I'm going to go over to dollar yen now. So this one was not quite as clean as the dollar franc example. But I just, again, wanted to kind of place a few trades just for illustration purposes. So through here, this would be the origination point right here on the 15-minute chart. The reason why that's the origination point on the 15-minute chart is because we had a big push down to the short side where we kept on pushing the low, and then finally we get a few boxes that are all in the same range, and then we had this box right here, expand low, and then expand high. Now we actually ended up settling right after this, so I'm going to go ahead and add a price line just to kind of illustrate that. So this would be an example of price settling right here. So expand low, expand high, broke through the high of the box, and then price reacted to that origination point from the box. So we got a good question from Asif about showing this on the euro. The euro is actually one of the examples I'm going to go into a little bit later, talking about being late in the cycle and how it can get a little bit confusing. So one of the biggest takeaways from this is you want to be early to the cycle. As it starts pushing and going all different directions, then you want to start being careful about getting wrapped up into it or going off of moves that have previously taken out a higher low. So let me go into that a little bit more. So we had an expand low, expand high, and we ended up pushing all the way up and taking out this liquidity. And this was our whole expand high right here. Now, what would make us think that this is still going to go short to the expand low point is that we've not had a new origination point up here. So after the market trends, we know that the trend is over because it starts going into a new contraction range where you have a bunch of boxes all next to each other and the market's just kind of whipping back and forth, and it hasn't opened up yet. So at this point, we've had a big push up to the long side, and we did not have the expand low and then expand high right here, which tells me that this might just be an expansion leg up, and we can probably look at it heading back down to the short side. And then also looking at a macro level, we're going through the expand low, expand high right here on the 4 hour. So expand high, expand low, expand high. So we broke through the high on dollar yen 4 hour, and now we're looking for the expand low. So going back to this trade that I placed right here, this is not the ideal place to put a trade in this instance. You'd really want to get a lot closer to the expand high or expand low point, but again, just for illustration purposes, I put it here so we'd have something to talk about. And we're also kind of reacting a little bit to the origination point from the 4 hour. All right, I'm going to go through 2 more examples and then I'll swing back around and try and get to some of the questions that are coming through. So the next pair that we're going to go ahead and look at is Euro Yen. So again, this one was bought very close to the middle of it, which is why you'll run into stuff like this, but I wanted to just have some things for us to talk about here. So this was a very clean example. So let's go back in time a little bit. So we had a big run up to the long side, and then we had new boxes starting to form in this area. Now, this was not the origination point of the master pattern that's playing out here on the 15-minute. This one was because on this origination point, we had a box in between the expand low and expand high. After we got this box, we did not have one for quite some time, or we had this box and then we had an expand high, it expanded a little bit higher, and then an expand low. So expand high, expand low, expand high. Now we'd be looking for an expand low. I think when I took this trade, we were actually reacting a little bit to the center line. Or we were reacting to the origination point. So expand high and then expand low is what we're expecting next, now that we've had the expand high. But you guys can see from, Wade's mentioned it, you can look back and see the original box that all of this started coming out of. So that would be this point right here, this box, and it's in a new range. Now, where this can get confusing, if it's not already, and for those of you, if it's a little bit laggy right now, the recording that is going to come out of this, the pointer shouldn't be really laggy at all. So it'll, if you have to go back and watch a little bit of it, we can't do anything about any lag if you're having some. The point about all of this stuff that Wade talks about, where you can see the highs and lows pointing back to the origination point, this is again a very, very clean example of the expand high, expand low, and you can see all of it kind of funneling back to that initial point. So, excuse me, actually I'm going to move this over to an hour and 1 minute chart. Okay. So looking through at this guy, we actually started a new origination point. Okay, so let's kind of go back in time a little bit. So I'm going to use the 1 minute chart on this, just because it all plays out pretty equally on or it builds the same on all charts. Obviously the 1 minute is a little bit faster and is going to give you new information a little bit it's going to change the information because you're going to get more origination points, but it'll all play into your higher time frames as you go through and look at all this stuff. So identifying a new origination point. So price pushed down back here, and this is all leading up to where we're at right now, pushed down to the short side, and then we had a new origination point down here. We had an expand high, expand low, and then on the expand high, we ended up pushing to the long side and making a new range. Once we got up to the new range, we immediately started another origination point where we had an expand high and an expand low out of the initial box. And then from that point, we had expand low where we broke through the low, and then expand high following that. And then we started pushing down to the short side. So here's a question from David, and this is just kind of bring these things back around. So the basic strategy in the online course is getting on the opposite side of your entry time frame expansion in line with the overall trend. So in this case, our trend is to the short side technically, but again, just for illustration purposes, it seemed like a better idea to take a long trade in this instance because we did not take out the expand low. But ideally, the best way to go about doing this is to look at your entry time frame, identify the expand low, expand high points, and take, if your trend is short on your larger time frame, to take the expand high points in line with the short overall trend, just to bring it all back around. So in this case, if we've got a bunch of yellow candles through here, ideally you would want to hit these expand high points on your smaller time frame to go in line with your overall trend. And that would put you by default on the opposite side of your entry time frame expansion line to take it down short. Now the reason for me entering into a buy trade is because that already played out here and we did not take out the expand low point. We very easily could have, but we didn't take out that liquidity line. So it seemed to me that it might be a better option to take it long on this trade and see if we were going to retest the origination point that's kind of starting out of this range, which it looks like we might be doing right now. So we'll give that a little bit of time. All right, give me 1 second. There's a lot of questions coming through, and I apologize, guys, for any of the lag. It's a little hard to work around here. All right, give me 1 second. Wade, I'm going to look at some of the questions, and Wade, if there's anything that you want to jump in and add into all this.
Yeah, definitely. I'm writing down questions. You guys are coming in. Anyway, good to see everyone on too. I'll come on here as soon as Shane's done with his deal, and answer some of your questions too. Got some definitely some interesting things coming in. Oh yeah, Shane, I'll let you finish up, and then I'll jump in here in a few minutes.
All right, so one question here is, how do you define the trend? It's basically just looking at your higher time frame. You know, the same thing that you would do inside of the basic strategy. So this is just another layer on top of that. So if your overall trend is long or short or whatever it is, then you'd want to align yourself with that side of the expand high or expand low as it's starting to play out. So in this case, you know, again, where I decided to get in on this just for the illustration, it had already gone through, it's pushed to the short side. But if you can align yourself with an expand high or expand low, or, you know, kind of manage your risk off of the settling of price after it's gone through those phases, then you want to align just with the overall direction. That's where the Heikin-Ashi colors come into play and are pretty useful in these types of situations. sorry, 1 second. So in this case, we had, again, and this is also a fresh box on the euro yen. So this will get cleared up and we'll start getting more of a push in a single direction, just kind of as time goes. But we had, again, expand low out of the hour box, followed by an expand high. Then an expand low that did not take out the low. So now we're starting to swing back up, and we'll have to see if price is going to settle on the origination point right here, because at some point it's going to trend. There's a question, what does expand high and expand low mean? So that would just be inside the three market phases, we have the trending phase, which is where we have some rapid movement that clears the range. So I would consider this more trending movement, this push up to the long side on the hour. And then we had contraction. So that would be the other phase of the market. And then expansion is when it's not trending and it's not in contraction. And expansion legs are where it's pushing the lows or pushing the highs, but it's not trending movement and it's staying inside of that general range. So that would be kind of coming back to the master pattern, just where we start having the whipsaw that goes and starts knocking people out and getting people confused about the overall direction. All right, so there was one more thing that I wanted to go through, and that would be the euro dollar example. So euro dollar is a tricky one right now because we kind of went through and had a whole phase. I'm going to bring this up on the daily. So euro dollar, we can see back through here, and then I'm gonna also go through a few of the little rules of thumb of looking at the market this way. So euro dollar, I'm going to stick point right here because this is where the market really started opening up. And also, we didn't technically hit any of the criteria through here because we might have taken out a low or a high, but there was a box in between it happening. So that would be the reason that this would not be the origination point. Or this box right here, we had an expand high, and then it eventually ended up going for expand low, but two boxes happened in between that point. So this is the first one where we had an expand low, broke through the lows, and then an expand high, and then we had a box. So that had taken place, which is why I'm using this as the origination point. So we had expand low, and then an expand high, pushed up, and then it started pulling back, and then we had another expand high, and that's where we kind of ended up. Now at that point, we were looking for an expand low. So as the market starts pushing down, we had a little reaction to the origination point, and then it pushed down to the short side. Now you don't necessarily know that that is going to end up being the low, but as it starts pushing up, if you can manage to get into a trade somewhere in this area, as it starts swinging back around to the long side, then you know that it's either going to get hung up on the origination point or it's going to be looking to take out the previous expand high point. So here would be the previous high point, and then we ended up pushing right past that. Now once that happened, then we're looking for an expand low. So then the market turns and it starts going the other direction, and then we've got our expand low point. So this one was a very it ended up, in hindsight, it ended up being a cut and dry, but we know that the reality of, managing a trade inside of these big swings is a little bit more difficult. So that kind of brings me to some of the things to be careful about with the master pattern. When price gets too far into the cycle or gets very far into the cycle, you will get some of these larger swings back and forth, but they get a lot more difficult to navigate. And there's two reasons for that. One is just time, because it has so much more market that it has to swing through. It's going to take a lot longer to reach that point. So if you miss your entry down here, then you might be stuck you might be tempted to take a trade based off of the origination point before it really settles, or before you have a clear indication about whether it's going to settle or not, or whether it's going to take out the high. So you just want to be careful, and ideally, this kind of goes back to the volatility report, where you want to be in a fresh market that's just setting up, so you have the ability to catch some of the early expand high, expand low points leading up into some of these larger moves. So as far as euro, we had expand high, expand low, and then we formed a new box through here, and we had yet another expand low, expand high. So this is kind of the second thing that I wanted to, kind of a cautionary tale. Now, I was talking to Wade before the webinar about this. Unless you can figure out how to get into the market maker's back office and figure out exactly where they're placing their orders and exactly how they're conducting some of their business, you have to kind of look at do some assumptions about where a new range is starting. There's never going to be an exact formula about where a new range starts, other than a general, it started a new range in a new area, and we can see the beginning phases of the stage playing out. So this would be, I would consider this a new master pattern starting out right here. So we had an expand high, expand low, and then euro dollar formed a new box on the daily. So let's go ahead and take a look at this one. So new box, expand low, expand high. We never took out the expand low point right here. So that's important. That kind of goes back to that euro yen trade that I was talking about, where it didn't take out the low point, so then I went into a buy. So never took out the expand low point, and then price swung back up, and we can see that it settled on the origination point before pushing up long. So it not taking out an expand high or expand low point can also be important. And if you want to, kind of look at that stuff and use it to get into a trade, you just want to align yourself with the overall trend on your smaller time frame and look, in the case of this market through here, after you see price start to settle and you see an expand low point, or you get the opportunity to enter on an expand low point in hopes that the market will rise, that's always going to be your best option. One thing that can get real tempting about this is trading against trend, because you see it's at an, if the trend is going long and we just hit what is technically an expand high point, there can be a real temptation to rip that rip a trade going short against the overall trend, and that is probably where you're going to find you get the most beat up if you end up trying to do something like that. So you really want to avoid ripping against trend when just because it's at an expand high point, or expand high or low point. Okay, so let's go ahead, and I think that was pretty much all of the notes. So Wade, I'm pretty much done on the exact examples I wanted to go through. So I'm sure that we're going to spend a lot of time going back over some of this stuff through the rest of the webinar. So that being said, I'm going to pass over to Wade to kind of, and we'll be going back and forth answering some of the questions that came up, because there are quite a few questions. And just to let you guys know, we're going to be cleaning all of this up. We wanted to kind of run it through all of you guys in a live fashion, so we can, figure out where the out points are on the understanding, and then kind of condense that down into, a 15-minute video that we're going to add into the course, where everything is much more concise. So, appreciate you guys, letting us do this with you live. So anyways, I'm going to go ahead and hand it over to Wade, and then we'll go back and forth and kind of field some of your questions. So thank you guys.
All right, thanks, Shane. All right, guys, give me a second. I'm going to switch over my screen here, make sure everything's working. 1 second here.
Yeah, and there's a lot of questions about which expand low or high point are you talking about against? Because there seems to be a little bit of lag. I was pointing at them as I was going, but it looks like that didn't translate all that well as we get real precise with everything. So again, we'll try and go a little bit more in depth and answer your questions, but again, we wanted to do this live so that we can kind of clear up any misconceptions before we make the video, just make sure that it's as high impact as possible.
Yeah, I think I was experiencing some lag watching you too. So anyway, I apologize about that, guys. It's just internet, technology either works or it doesn't sometimes. So can you guys confirm that I'm not lagging? Does this look smooth? Just a simple Y in the chat would be fine. Just make sure that it's working out okay.
At least on my end, it looks pretty good.
Okay. I just want to see if it's more of a global problem. Okay. All right. So at least you could see me pointing things. So again, apologize about that, guys. So you guys, man, the feed was blowing up. And you guys have a lot of questions about the master pattern, about all this stuff, and you should, because it's an interesting topic. But what I'm going to tell you guys is if you're totally confused, then that's okay. The reason why we go through this type of stuff is because there's some of you out there I'm going to go back to an old metaphor. This is something that we used to say a long time ago. Actually, my dad's the first one that started saying this back in the day. But some of you guys just want to know how to tell time. You guys want to just know, it's like how do I want to know what time it is. And what I mean by tell time is you just want to know how to interact with the market in a good way. You don't really care as long as it's a good way, or you feel it's a good way to interact with the market in a profitable way. Some of you guys, that's telling time, but some of you guys can't tell time unless you know how the watch works. It's like you need to open up the watch, you need to see the gears, you need to see how they come together, and then you'll be fine. Once you know how the watch works, then you'll be fine telling time. So there's those two types of personalities typically that we get. And so when we're going through more advanced concepts of the expansion points, and Shane's talking about expand low, expand high points, those high and low points that feed out of the original contraction phase that they point back to. Some of you guys want to know that stuff, and when we talk about that stuff, it's really just, like I said, it's just opening up the watch and showing you how it works and kind of the advanced concepts behind this. But if you find that confusing or unhelpful, refer back to the basic strategy, because at the end of the day, what you're trying to do is you're trying to find a higher time frame that's pushing in a stable direction, or showing stability pushing in that direction, and then you're trading the master pattern basically on the lower time frame, but only in the direction of the higher time frame. So for instance, if your higher time frame is going long, for instance, right now, what do we got going right now? You're on Euro USD. If you're not thinking about, we do have an expansion range happening. Look at this origination point right here. Expand up high right here, just like Shane was telling. Expand low. That starts the phase. What happened here? Expand high. How do we know this is an expand high? Because it beat this last point right here, right? So as you're up here, where's the expand low point that you got to beat? It's back here. That was the last low point. What happened? It beat that point. Now we're coming back up towards the expand high point. So how many cycles came through there? 1, 2, 3, 4. And now we're working on the 5th coming out. And we know that the origination point is this box, because all of these expand high, low points point back to this being the neutral point. And that's essentially what Shane was telling you, is how to identify those neutral points. That's how the watch works. That's the overall methodology of understanding that those phases coming through there and where you are in association with that original point. But that's really the basics of that. But forget about all that. That does help to have some of that insight, but forget about, let's go to the basic strategy. Right now on the weekly chart, you're expanding long, right? Out of the last box. What do we tell you to do? Here's your blue candles, your last expansion lines right here, you're above, right? So real straightforward. Okay, Now let's look at where you are on the hour. Say if you're trading the hour into the weekly, which it is a smaller time frame. I mean, you could, the hour works into the weekly. It's a little more aggressive. 4 hour also works well into the weekly, so you can go back and forth between those. But right now, what's happening? Let's look at this box right here. Okay, we know the weekly's long. Let's do this real dumb. Okay, this is like you've been trading like 1 day. This is the lesson. Above white line, blue candle, buy. Okay, real simple. Okay, you're in the buy zone, but you're not ready to buy yet. Okay. Let's look at this. We've had this run up right here. That's good. It's showing movement. Now we have a box, right? Box breaks out long in the direction of the weekly. You got to be careful with this. Box breaks short. Now we're below this expansion point right here, right? So the weekly, we know that the stable time frame is long. Expand high, expand low. You can see that we've already started a new phase as this box, as the origination. But the basic strategy, going back to the very basics, says when you're below expansion and you're low and you're long over here, you're in the buy criteria zone for a strong entry. Now there's finesse to where you enter right here. You could have entered down here on this turn right here. You could still enter up here, because you're still below right here. And the reason, what we're doing right here, without understanding the expand high, expand low points, all that stuff, the basic strategy is already going to align you with that principle. Because what we know right here, we have the expand high and we have the expand low point. We are essentially betting on the probability that this expand low point is not going to turn into the trend. It's not going to keep going and going and going down to here. Why? Because the stronger power is still pointing to the upside. So we are basically trading this expand low point, or this rotation right here, long, in expectation that we're going to eventually attack the expand high point, which is right here. But we are just conservatively aiming for the origination point. That's why you always time your entries with a new box or a new expansion dot. Without the box, doesn't matter. They represent the same thing. You're betting that this right here, whoever sold this market, is going to lose money on that trade, because they are betting against the current of the ocean. And we are timing that with the expansion phase. So essentially, as this market pushes up long, you're trading against the expand lows, wherever the boxes form. You expanded low here. You're saying the dumb traders are selling the market. You're saying, okay, thank you. I'll buy that from you. You're taking the other side of their trade, and you're timing it with the expansion of this box. So a question you guys might have right now, I know there's questions flooding in, but what you're saying, well, what about the box right now? Can I still enter the trade in this box? And really the answer is yes, because you're not looking at an individual box, you're looking at the groups of boxes, and you're looking at the overall story. The likelihood that this box is going, even if it does come out the bottom of it, there's still a pretty good likelihood, based on the fact that the weekly is still trending long, that we are gonna the ending of this box is going to end up going to the long side. And price right now, because this is the highest point of reference in this trend right now, the fulfillment of this opportunity is coming up through here. So regardless of if we're in a box right now or not, trade placement is still strong according to the overall framework. You're still below this line right here. It's real basic, real basic. That's your point right there. You've expanded low below that point. We are betting that any movement below these points, these balance points, is going to not be a good trade based on the current of the ocean. That's it. And now the finesse of entry, that's something that takes time. You know, most people just wait till they see the market start to turn, and then they'll buy it right here. No one, it's very difficult to judge the tip of the wick. You're typically not going to get that. Unless you have maybe some prior expansion line or something that you're using. But right here, you know, the last expansion line was down here. You know, that if you just bought right here, it could have gone back to here. In this case, because the framework was so far down, this one was probably better just to wait for the rotation. So right now, if you bought right here, you're kind of just baking sideways in this trade, and it's still the trade's not over. This is just noise, but I would say there's definitely still a really good probability that you're going to break long out of this box and continue this trend upward, and you're going to attack the expand high point of this cycle. And that's why you have the boxes. And that's, like I said, go back to the basic strategy. If you feel spun out or you feel like you're not getting it, go back to the basic strategy. You know, when you're above expansion on your higher time frame, you're looking for below expansion on your lower time frame, taking it right back up through that level. Put you into the money, see what happens at expansion. If it progresses, stay in the trade. If you get denied, close the trade. Takes finesse, takes experience. That's it. It's real basic. And it works. Now, the what Shane is talking about, when we talk about looking at the master pattern and looking at the expand high, expand low points, if you have a little bit of insight into the overall cycles, then when you get a situation like this where on the weekly you have the expand high, expand low, expand high, okay, the way that this is going to help by seeing that, getting a general sense of that overall cycle, is that when you get situations where, let's say, like the weekly pushed up through here and it's all the way extended up here, if you have a situation where the weekly's long up here and you get an entry opportunity, you do need to keep it in the back of your head that you are this is showing to be, you know, a multi-leg expansion based on what's already happened. And so that knowledge will give you a little bit of insight. If you get a major reversal up here, and let's say you have an opportunity to buy like this, but it just falls apart, you'll dump that trade quickly because you know that the weekly, that time frame is still in a multi-leg expansion. It could whip all the way back down and hit the expand low point. It's a scenario you need to be prepared for. And as the lower time frame starts working that scenario out, then you'll be able to spot that early rather than just always thinking like everything's just going to take off and go on forever. No trends last forever. They all eventually stop. So that's where that insight helps. But other than that, if you lose on one of these trades, if you have just going off the basics, and you buy the rotation, and it may come down, test the low, it may go a little bit, there could be 10, 15 pips of give under this low. So you may get stopped out, but it still may be a good trade. You just may be able to get a better entry on it. But if it falls apart aggressively, just you buy it and just goes apart, you need to step way back, take the hit, and the hits shouldn't matter as long as you're not over leveraged. I mean, no one likes to take losses, but losses are just you're paying for information. So if you take the hit and it comes down against you, you need to start asking questions. Why did I lose? What's happening with my higher time frame? Is my higher time frame still stable? Is my higher time frame going to back off any key levels? Is that why it's not working out? Ask the questions. Don't just mindlessly enter the market. Come up with enough, if you ask enough questions, you'll eventually get to a point where you'll say, okay, you'll get enough understanding where you're either going to take the trade again or you're just going to leave it alone and wait for more information. So anyway, this is a decent opportunity right now, especially if you see the candles on the weekly. You can see that we had some pretty thin candles here, and now we're starting to build a little bit of a body here. I would say there's definitely a good chance that this weekly candle's going to at least take this high out on the weekly. I don't know if it's going to break the expand high point of this overall range, but I'd say getting up to the top of here is pretty likely. So right now, I mean, this is kind of the kill zone. I'm not telling you guys what to do. You guys pull your own trades. You guys trade your money. I'm not trading your money. All I say is don't over leverage. and be smart with that so you can live to fight another day. But my opinion is this is a decent opportunity right here, and you're early to this new momentum shown on the weekly here. I'd say there's definitely a good chance that you can. Well, let's see. To the top of this is it's 130 pips. Where's 130 pips right here? Basically up through this liquidity line here. That's a conservative target on this trade. So, I think there's a good chance that's going to play out. If you were going to enter this trade, again, just my opinion, you guys trade at your own risk. Right now, I really wouldn't want to see it go much below the bottom of this box here. I would for sure protect your profits below this. I mean, protect yourself below this low right here for a loss. If you did get stopped out, if you're going to enter the trade right now, you need to calculate your risk and your money management for a loss, associated around this low, because we could break out, down here and come test this. It's a possibility. Where the idea completely falls apart, in my opinion, where it's like it's just no longer a good idea, would be if we get down to this expansion level. If let's just say the market does push down, it starts playing with this level right here. If it gets down here, this candle's going to start to look a little bit different, and then at that point you need to question where we are. But up until you get down here, even if you get a reaction at this level, and let's say it does come down and bounces off, that may still be a pretty good rip to the long side. And now, even if you took a loss, if you entered right here, you take a loss down here, but now price is down here, you're going to make that money back anyway, because the trade is still good over here. And now you can manage your risk. If you get a reaction down here, now you can manage your risk much tighter around this key piece of framework. So, but anyway, I think it's good. I think this is a decent opportunity for a long right now. I think you're early to the weekly. I would not be surprised to see Euro USD, 100, 200 pips long from this point by the end of the week. Again, you guys trade at your own risk, just my opinion.
Hey Wade, there's one question that I wanted to address that came up, which is basically how would you manage your stop or entry on something like this? So in this situation, we've got that new box on the hour. We don't have all of the info at this point. All we know is that we have a box. But if we could just kind of picture in our mind's eye that price goes and pops out to the long side on that, and then comes back down, ends up rotating off of the expansion line that's going to be coming off of that 1 hour box, and then we get a reaction, it starts swinging back up to the long side, then you could possibly enter on that new expansion line and manage your risk just below it, and you'd have pretty solid risk management on that trade. So where it's at right now doesn't necessarily reflect what it's going to be, and there could be a little bit clearer entry coming up. But either way, as long as you're like Wade mentioned, you're trading inside of the swings to get you're trading in line with the master pattern on some of your higher time frames, and you're kind of going back. The basic strategy is to kind of attempt to get you to trade in line with this without having to go as in depth in all the nuts and bolts, how the watch works, as Wade put earlier. But it's basically the basic strategy where you have your higher time frame is going a certain direction, and then you buy the opposite side of the expansion line for your entry. So more often than not, if you do only that is likely going to get you into one of these swings in line with the master pattern, and you don't really even know about it. So this is going a little bit more in depth on the basic strategy.
Yep, absolutely. Going along with that, I'm going to do something real quick here. I'm going to throw a moving average on here. Probably, I don't know, let's see what a 15 period looks like. Okay, so, let's say that you're trading, without, a lot of people use tighter moving averages like 10, 15 period moving averages. What ends up happening if you're not looking at ATS software here? if you're just looking at just the general candles, what ends up happening is as it comes up, a lot of people, they like to buy these rotations, and they can work, obviously, trading off the moving average. But right here, as it starts bouncing off, some people will still continue to try to buy through here, because remember, they're not seeing the box, they're not looking at the timing of the phases, right? So what ends up happening is that, and then especially they'll buy this because now it looks like it's getting a strong rejection off of that moving average right here. So they'll buy that. What we're doing is that instead of just going off of the bounces off moving averages and things like most people do, is we're timing the expansion out of the box. This is a timing feature of the entry strategy. So we wait for this. This is this key defining phase in the market. This is where the volatility comes in, and we know that we're going to move from this level. It expand high, expand low. Right here, that gives us not only framework, but it gives us timing of volatility, that we know that things are moving, and then we're going to essentially trade against these people shorting the market. So that's a difference between just generally looking at a moving average. Same thing right now. People would be looking at this moving average saying, trying to trade short now off of the moving average, but we know we're in a box. So we are basically looking for the outskirts of the market as we get into the expansions, because the expansion legs are what gives you the strong entry. And if you're not looking at it in the sense of timing the three market phases and trading the expansion legs, if you're just looking at it from a sense of up and down movement, especially with lagging indicators like moving averages and things like that, then you're going to end up getting your bearings all twisted in understanding the market direction. You're just going to be trading. A lot of people would have shorted that. They would have seen these candles come up and then shorted right here. They would have shorted that just trying to trade off the moving average. But by timing this, by understanding the big picture right here, this becomes an entry opportunity for a long, rather than what looks like, we're just trading through this moving average going short. This you could see it respected the moving average right here and pushed short. A lot of novice traders would see that and say, oh, look, now see the direction's changing. But no, it's not. It looks easy right there for a reason, so that people will get suckered in. Then the strong liquidity will come in, suck up those positions, and then they'll have the ocean. You've had 1, 2, 3, 4, 5, 6, 7, 8 weeks that all you had to do was be an expert buyer of the market. No sells. If you're trading on a week by week basis, you're working off the weekly trend. Week after week after week, you just had to figure out how to buy the market. It's when you get lost in the minutia of indicators and changing settings and strategies that you get greedy and try to get every little up and down movement. You're never going to do it. By finding the stable trend, all you have to do is just work that trend. You're long, you're long, you're long, you're long. You have plenty of framework on this screen to manage your risk and come up with good scenarios that are highly probable. And that's really, at the end of the day, all we're trying to do. So anyway, hopefully that wasn't confusing. I don't know if I got my point through or not. But anyway, so I think this is a good opportunity right here. I'm sorry I spent so much time. I wanted to look at a few more pairs here that did come through, and we'll answer a few more of your guys' questions. But this it's pretty basic. It's pretty basic. Long on the weekly, below expansion. We're betting that this is a sucker's move. You buy it. You buy it from the people getting suckered into the short, based on the fact that you have the stronger money, the bigger money on your side. You're going to take the opposite side of their trade, and you're going to let them get, as they sell short and they see the market's going against them, they're going to buy the market in the form of their stop loss orders. They're going to close out those sell positions, it's going to further push the market, and then you're going to expand past the expand high point and then push into a long trade. Meanwhile, you're in profit. Them losing is your gain. So, it's essentially, it's a battle. That's how it has to work. So anyway, let me go through some of the questions here, and then we do have a few currency pairs I'm going to do some top-down analysis on for you guys. Let's see. One question. Okay, one question we had from David. We have a number of Davids on here. I don't know which one it was, but stop loss levels for trading the master pattern. Okay, another strategy for forming the stop loss level is measuring the expand high, expand low points. So for instance, right here, you do have an origination point right here. Here's the expand high and expand low right here of this origination point. Now we're only trading it in trend, right? Because we have the weekly is saying we only need to be going long. But for a stop loss or a potential push, what you can do is you can take some measurements, and if you guys measure these, you'd be astounded how accurate this is if you just mess around with it. But right here, this is what's been proven in the market is from the expand low to expand, you have 737 points, right? Or 73.7 pips, expand high or expand low to expand high. So if this does push, you can measure the same amount down, 731. Look at it right here. We actually have a liquidity line sitting right there. So when if you're just trading the back and forths and trying to identify the swing highs and swing lows, then you can basically judge how far the market can push worst case scenario based on what the expansion range is. So you have it defined by here. So basically just 737, worst case scenario is it can literally get down to here. There's enough power in this market if this long doesn't work out to push it clear down to here. So if you're just trading the expand high, expand low points, you can understand what the possibilities are. You may not want to go that far, but that it'll show you how much power is in that market. So anyway, it's just another way to look at it. If it did get down there, obviously you got this framework right here. That would pretty much debunk this trade right here. It would if it pushed all the way down here, you're probably pulling yellow over on this candle, and it's no longer a good opportunity. So anyway, that's just something. You can let those expansion ranges, remember, we let the market prove the market. We're not imposing our own criteria, or it's like, I'm only going to give this 10 pips, or I'm only going to give this 20 pips of risk. We're letting the market interpret the market and then interacting with what it gives us. So the volatility has already been proven here. So you can take those measurements. Same thing goes the other way, is that since this expansion range is 737, if you get up to this high point, let's say you buy this, you can measure that same thing to the expand low point. We know that if this is going to be a significant move up, it's going to be at least 737, right? So how high is 737? Well, what do you know? Here's basically 715. So 737 is right in around this liquidity line level. So same thing for profit target. You can expect you're at least going to get this much movement because that's how much it was manipulated to the short side from the top. From that exact point to that exact point is how far market makers manipulated people into a short. So you can expect by the time we get out there that probably, it doesn't always have to happen, but there's a good chance to get up to here, because that's from that top to there is about the exact same size as the down manipulation. Again, volatility has already proven it. I'm not guessing. This is how much money is in the works right now based on pip movement. So anyway, let's go to, let's see, I had another question I wrote down here. Another question I'm just going to jump on real quick from Rick. Rick's always got good questions. Appreciate it. How do multi-time frame master patterns correlate? Well, remember, if your higher time frame, if you can spot a very clear defined multi-leg expansion, then you just need to be careful around the expand low, expand high points, because those could be big reversals. So if you kind of going backwards, remember the higher time frame always has more power over the flow, the push of the money. So if a high is going to fall apart on your higher time frame, that means that you're going to in for a big reversal on your lower time frame. because the higher time frame is more significant. So if you can spot something that is a key characteristic or a huge clue on your higher time frame, then that needs to be a focus as far as tuning your trading idea and your mindset towards that clue. And then you look for confirming clues on the lower time frame to basically to confirm that idea. When the clues match on the lower time frame, match the consensus on the higher time frame, now you're starting to see that things are falling in line. So okay, so let's see here. A lot of questions, guys. So appreciate all the interaction here. Shane, if you want to add anything to that, I'm going to go through some of these recent questions before I get back to some of the pairs that were asked to be looked at. So hang on one sec, guys.
Real quick, Wade, can you move it over to euro yen on the hour and 1 minute chart?
Okay.
Again, that was the hour and the 1 minute. So that was that buy trade, and it's actually I've got my my master pattern origination point setting at that at 121.47. So it is basically just kicking back and forth right at that. So we'll see if it ends up settling in this area. One point that I wanted to make while Wade is going through looking at some of the previous questions. Here on that, we can't see my screen right now, but I've got my 1 hour origination point at 121.48. That's for the hour. That was where the expansion line started from the previous box on euro yen. So again, that's 121.48. And then the one that I've got on the 1 minute that is still relevant to what's going on is at 121.47. So they're within a few pips of each other. And you're going to find that quite a bit, that you'll be looking at different time frames and they're all going to correlate with one another on exactly where they end up. So just to kind of go back through kind of the thinking on this trade taking it up long, was that on the hour chart we had expand low, then expand high, then we had an expand low, but we did not take out the low. So that's important. We did not take out the low and then it started pulling back. So it very easily could have. It was only a few pips away from doing so, but it did not do that. So that could lead you to the conclusion that we could be going into an uptrend, and we might react to the origination point and start pushing up to the long side. So in this particular case, I didn't manage to get very good entry because I was just scanning all of this before the webinar started. But we can see on the 1 minute chart where it came down to the short side, that was the expand low, did not take out the low on the hour. And then we started pulling back up. We got a box and then price started pulling up. In that situation, you can use some of those expansion lines near the low of the chart on the 1 minute to help you manage your risk on an entry, in hopes that an expand high will continue up and it'll go into you start moving to the long side of the market. So again, it's just using some of the framework once you get into some of those extremes to kind of help you manage your risk.
So while Shane was going through that, I going through some of your guys' questions here. I want to address one question from Eric, and I've already covered this a few times, but regarding the grade A alerts from the ATS assistant. There's a couple of things here, Eric. So you're running on the 1 hour into the weekly, which is actually, it's not a bad 1 hour or 4 hour is not a bad combination. However, the grade A is only going to happen the very first counter trend expansion you get on a color change. So what ends up happening is that it's looking at the weekly candle color, and if that grade A expansion's already happened, then it'll literally, if the candles stay blue for 4 weeks, you're not going to get an alert for 4 weeks, until you get a yellow rotation, and then you get the first counter trend expansion. So if you haven't gotten any alerts, it's because it's waiting for the the color change on the weekly to happen, which again, that's the beauty of the weekly, is it doesn't change directions all that often. But if you're waiting for a grade A trade, you could be weeks out until you get a new color change. The second thing is running it on 21 currencies. You can, the higher time frames you go, you can like an hour into the weekly, because the opportunities are more rare, you can get away with running it on more currency pairs. However, for the sake of getting more experience, I would probably tune that down. If you're going to run it on there, probably to like no more than 5 of your favorite pairs that you understand. Probably and I would suggest some majors. But I don't know, as far as if you can only trade the higher time frames like that due to work or whatever, I would stick with that. But if you want to get more, and this goes for everybody on the webinar, if you want to get more experience on the grade A trades, I would just run them, run it on, if you want to get a lot of experience, run it like on the 5 minute into the 4 hour. That'll fire off quite a bit. Not that you're going to take every signal, but you'll get a sense for how they fire and when they fire. And that'll kind of help you understand, because again, I'm not going to spend a lot of time on this, but the assistant is really, you're not going to be able to use that optimally until you understand how to trade the strategy manually. It's a great tool. It's really powerful, but there is a diagnostic process that you have to go through when your screen lights up with one of those signals. You need to understand the context of the higher time frame. All the things that we've been talking about on this webinar need to go through your head before you pull the trigger. So if any of you guys are running the assistant, you think that you're going to slap that thing on your screen, you're going to get an MT4 mobile alert notification, you're going to enter the trade, you're going to get wrecked. So don't do that. Go through the training and spend some proper time to learn how to use the charts so that you can actually use the tool effectively. We don't, and we say that in the training. A lot of people, for whatever reason, just glaze over the training. I don't know why, but it's super important that you guys spend the time to understand the framework on the charts, and that way you can properly understand the risk dynamic of those grade A signals. And because some of them, if you look at the higher time frame, yeah, it'll shoot a grade A signal, but the higher time frame is terrible because it's a very simple, basic signal. It's just looking at the candle color. So need to definitely be careful with that. Okay, so let me see here. I apologize if I can't get to all your guys' questions. You guys can always feel free to, for you guys that are new with us, send them to support@TradeATS. We're more than happy to help you guys out that way. And then a lot of the stuff that you guys, the same questions happen over and over and over again. If you're new, I would suggest go through the old webinar archive, because this is, believe it or not, it's pretty simple. We go over the same things over and over again. The only thing that changes is the markets. We have new markets and new trends to talk about, which is basically the only thing we could really do different on the webinar. Everything other than that, it's the same stuff every day. Your guys' basic questions will be answered in those old webinars. So I'm gonna dig into some pairs, and I'm probably sure I'll answer some of the questions that have come up just by generally talking about some of these. One I'm going to go back for David was pound NZD, 4 hour into the 15 minute. I'm going to take a look at that for you real quick and see what's going on. Oops. So I'll put that on the 15, and then this one I'm actually going to, before I look at the 4 hour, I'm just going to glance at the weekly. Good thing, guys, if you want to know, you want to tell the weather of the week, what your expectation is Monday through Friday. Even if you're trading a 15-minute chart for your entry, look at the weekly. See what kind of momentum it's showing, see where it is, so you can form some assumptions or some possibilities. You could form an opinion of what the follow through of the week should look like. Now, this weekly on pound NZD, what I can tell you without looking at the lower time frames so far, I can tell you that this sucker, has been going short for a while. But since the color change, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 consistently short weeks. So, that's pretty straightforward. Even out of the box, we had 1, 2, 3, 4, 5, 6, 7 weeks now that you had to be able to sell this market. So, you know, it's still short, but understand that it's been a while. One thing, if we're looking just like Euro, just having a little bit of sense of if there are any multi-leg expansions happening. Let's take a look back. Just generally glazing over the chart in the recent history. If I look back at this box, I see an expand low and then an expand high up to this high right here. Now we've just, at this point, this points back to the expand low, which is right here, which we did come through on the weekly. So I would not be surprised if we don't get a little bit of a reversal, especially as this market loses momentum. You can see that it's not pushing past the lows very, you know, the last few weeks, 3-4 weeks have not really shown significant movement down. I wouldn't be surprised if we don't rotate back because, you know, we pass this expand low point. And then we could even come all the way back up into the origination point, which is right here. Again, I have no idea if this is going to happen for sure or not, but we do need to be aware of the possibilities, and that is a possibility. So I would say just my general assumption based on the architecture, everything here, that you're a little late on the short side. I'm not saying don't trade it short, but should you be max leverage, you know, putting everything you got into the market right now? Probably not the greatest idea. This thing's probably going to fall apart on you pretty soon. So that's my general assumption based on the week. Now that I have that, I've grounded myself in the week. Now let's take a look down at the daily. Okay, we see the daily starting to rotate. We're seeing that we've had an expand low leg out of this box, came up, settled below. That was a good sign. We're starting to move away down on a daily basis, moving short here. We're getting it looks like a pretty aggressive rotation off of this liquidity line right here. Again, this could be that reversal that I'm talking about. If that reversal does play out on the weekly, then we are at least coming back up to this expansion line right here. So right now, if you're stuck in a short trade, based off of what we talked about on the weekly and what we talked about on the daily right now, what's the sense? The sense is that we are due for a reversal. So is right now the time to be clinging on to a short position that you're out of the money on for dear life and hoping and praying that it's going to come back around short and pay you based on the weekly and talking through the weekly and the daily? No. The time to be hanging on for dear life was back here in a short position. Back when you had the expansion right here, settle below, boom, boom, boom. Now we're getting later and later and later to the party. So right now, you don't want to miss all this and say, that's it, this thing's going short, I'm all in right here. You missed it. That's the point of the volatility report, is to find stuff that's around this stage so that you can get some of this, get some of this, get some of this. And then if you got some of all that, feel free to keep ripping because you got money in the bank. You've earned the right. Trade it until it's dead. But don't start down here. Everybody knows about it by now. So that's just a general consensus. Now let's go to the actual time frames, 4 hour and 15. Okay, so 4 hour right now, 15 is long. And this could be the start of that big reversal. Do I know for sure? I don't. Again, just assumptions. So right here, if you had the rotation on the 4 hour, this was the bottom point right here. Your grade A signal should have fired right here, and it should have put you in the money. That was the first opportunity based on the framework of it giving us a defined contraction zone. There were going to be probably more contraction zones on the 5 minute. In fact, let's switch this over to a 5 minute. So your first grade A, because it only looks at the candle color, so we would have started right here at 4 o'clock candle or 400 candle. So here's 825. Take off the. Okay, so 4 started right here. Didn't break low here. First one, boom, right here. Here's your grade A on the 5 minute. So that's why I say, you could do the 15 minute if you want something slower, but the 5 minute works really well into the 4 hour too. So that would have got you in, this grade A would have got you in a little bit sooner than the 15 minute grade A. They're both probably going to work out well. But this one was down here. So that is the benefit of trading the keeping the separation a little bit bigger between your lower and higher time frame. So based on the way we feel about the week is late. It seems exhausted. Is it done? It may not be, but that would probably beg me to, or that would get me to feel like I would probably, if I was trading this long on the 4 hour, we're above expansion, basic criteria is intact right here, that you may want to give this a little more attention just because we're so late on the daily and the weekly. There should be, you know, some decent rotation to the long side. Right now, a conservative target, if you're trading this up long, would be this expansion level. You're at the high of this last predominant high right here. But, you know, we can gap from where we are to right here. There's a projected, you know, 50 pips in that. Again, we're just coming up with scenarios, talking through it, talking down, top down, start with the weekly, daily, what's going on. If you talk through it enough, you're eventually going to come up with a clear understanding and a battle plan. So is there an entry right now? Heck no. There's no safe, strong entry. We've extended out. The strong entry was down here. The strong entry was here. The strong entry was here. Do you guys see the basic strategy playing out here? You went blue down here. That's the first start. If you want to wait for the expansion line, that's also good too. But the color change showed you the momentum shift. That's why we love the Heikin-Ashi candles. Every time you're below that expansion line, strong entry, and it could be subtle. Boom, puts you into the trend. Hold above, boom. Now you're in. Your strong entry point happened. Below expansion, rip. Below expansion, rip. Below expansion, rip. All of the sucker moves to the short side are failing because your higher time frame, according to this setup, is long. Real basic. No trade right now though. So that's kind of my overview of pound NZD. Hopefully that helps. Again, just my opinion. You guys do what you want to do. But hopefully that talking through that helped a little bit. Okay, next one was.
Hey, Wade, hold on real quick. I wanted to point out that on that 5 minute, you can actually see the mini master pattern kind of playing out as we go through there. At that big dip that we had near the top of the 5 minute, we had an expand low, expand high, and then expand low. And then we had a reaction off of a previous expansion line there before it started pushing up long. So in that situation, you're looking at it, the micro on the 5 minute, but you know that you're only looking for buy positions. If you're using the 4 hours, your directional bias. So you're only looking for buys, and you see the master pattern start playing out right there. So it put expand low, then expand high, then it expanded low and then came back up and rotated off of that origination point. It settled under it for a moment and then started pushing down short. And then we had another reaction to an expansion line, and then it started swinging back up. And there's a handful. That was the most recent one that played out, but there's also a few more that played out just kind of as the market was pushing up. So it's finding that micro master pattern where just expand low, expand high, and then you'll see that there's pretty often some entries right around those levels.
Yeah, I'd say like Shane said, without you guys knowing all the crazy details of it, just by trading, you see that you're long over here. That's your probability. This is the idiot analysis. Anyone could do this. Candles going long, higher time frame, real simple. Even a caveman can do it, right? Okay. That's a real basic analysis. It doesn't need to be more complicated than that for you guys that are just starting out. As you're below expansion, you're catching right here. You see expand high, expand low. This is an expand low point. You're trading the rotation. You are naturally aligning yourself with the master pattern in trend. And that's why you're putting that probability up, and you have the management point. Same thing right here. We expanded low right here, expanded high up through this expansion level. You see right there, see, master pattern, expand low, expand high, but this high didn't end up pushing. It wanted to expand low more manipulation to the downside. We expanded low below this last point right here. Boom, came up. You see that it got rejected off of this expansion level. That's also a clue. So if you traded this up right here, you see you're not getting through, you dump this one at a break even. I know this is aggressive, and it's difficult to do in the moment, but let's say you just get stopped out below here. Oh well. You buy right here, you get stopped out right here. It pushes down, you're holding off previous framework, rotating off this previous average price right here. Get in again. because the fundamental direction has not changed. Rip it again right here. Take the loss right here, rip it again. You're make the money back from here to here. Your point that you're trying to get through is still here. So you're going to go up through here. You get rejected again right here, but that's okay because you're protecting. If you bought right here, you're protecting your position below this low. So now you're in. Now you've got yourself a strong entry, and now you're just baking. You're baking sideways, expecting that you're waiting for the next big push on the 4-hour, which is happening right now. And you have the strong entry point. You had to fish for it. You lost right here, but if you kept fishing, you found it right here, and now you're there. Now, if this fell apart again drastically, just boom, fell apart down here, then your fundamentals are changing over here. There was a question earlier, I forget who said it, but they says, well, what about if your higher time frame changes color on you? Well, what do you do? Well, you got to ask yourself, why is the higher time frame changing color? And now I know in situations where the candles are crawling sideways like this, you can get the candles to flash. But that's if you're getting confused or it's getting whippy on that, then jump out of it. Like if you're trading the 4-hour, jump over to the daily. Whoops, not the 1-hour. Jump over to the daily and see how the daily looks. See if momentum looks good on the daily, and that'll help you maybe get a little more confidence in holding the 4-hour if it's flashing back and forth on you. But typically, if it's in a follow part or if it's changing color on you, I would say that you're starting. You need to start looking for your out. I'm not saying just get out based on the candle color, but you need to really zoom in over here on your lower time frame, and you really need to think about the architecture. You need to think about, what is this really telling me here? What story is unfolding? And is this just changing color on me because it wants to whip down real fast? Or what's happening? And that also goes for how strong was your trade placement. If you had a weak trade placement, you got to dump it. You can't afford to see if it's going to turn back in your favor on the higher time frame. But if you have really strong trade placement, for instance, a trade like this, come off a piece of framework right here, you can manage your risk based off that rotation real tight right there. At that point, if it doesn't give you a strong move to the upside and it just goes sideways, and next thing you know, you got a yellow cut candle on your 4-hour, you dump it. It's not going to hurt you any. Just dump the trade, get out at break even or even a small loss. Wait for more information. One thing that new traders think is they think that there is never going to be another trade that's going to come. It's like, oh, I missed it, and then they watch it go by, and then they end up getting the fear of missing out and jumping in on a spike, trying to chase the trend. There's always another trade. And then if you miss that trade, there's 1,000 more opportunities coming after that. So just wait. Most of the money is made in patience. It's about being in trades that you understand, that are clear. If it's not clear, you don't understand it, don't trade it. So let me go to Euro Yen. And then we'll probably wrap this up here in a few minutes, guys, because my lunch just showed up. So, all right, let's see here. Euro Yen 4-hour and the 1-hour from Reynard. So you guys have been on here.
I wanted to bring up, this is one of the pairs that we were looking at as an example. So that actually ended up rotating right off of that origination point from the master pattern. So we had there on the 1-hour, we had expand low, expand high, and then the expand low did not take out the low. It came up and it ended up rotating off of, or somewhat settling for, at least for the moment, off of the origination point there on the hour. So it's pulling back right now at the moment.
Yeah, so we do, Shane's saying, you see how it's starting to unwind out of here. Multi-leg expansion pointing back to this as a significant level. So keep that in mind, that is in play. One thing though, but you guys, I'm going to put you guys on here. What's the problem with this time frame pairing? You guys could type in. couple of words will do it. And I think there's sometimes like a 15-second or 20-second lag in the webinar from when you guys actually hear me. So that's why sometimes I wait to see some comments come in. But what's the problem with the time frame pairing with the 1 hour and the 4 hour? Eric nailed it. Wayne nailed it.
Basically, every single person is writing too close. It's kind of funny, just all
Too
the
close.
different names, but too close from every single person. Yeah.
You guys got it. So for entry, this is these time frames are going to pull each other around and drag you around the chart. There's not really any statistical edge with this time frame pairing. So going back to for you Reynard, one thing I'd recommend is not trading too close together here. What you want to do is if you're going to trade the 4 hour, you're going to want to move down to probably the minimum I'd recommend is a 15-minute. And the reason you're going to want to do that is that the 15-minute is going to give you a lot more architecture, a lot more boxes, a lot more expansion lines to work with. Because the goal with using the lower time frame is to see the inner workings and make predictions of what the future of the higher time frame is, and also to get good trade placement. So when you have a 1 hour or next to a 4 hour, you're talking about only 4 1 hour candles make up 1 bar on the 4 hour. So by the time the 1 hour rotates, now it's pulling the color different on your 4 hour. So you don't want you definitely want to space out those time frames. Even down, I would test out the 15 and the 5 would be my suggestion. But anyway, yeah, you guys nailed it. Too close on the time frame. About 100 people came through and said that. So thank you guys. Glad that we at least got that through to some of you guys. But let's just do some general analysis on this. Right now we broke high out of this box. Let's see if there's any, actually let's jump over to the weekly. Okay, so weekly is pushing long. We're above expansion right here. However, we are getting we could possibly get hung up on the expansion level right here. So I think we went over this actually last week in the webinar, because I think it feels familiar talking about this, what I'm looking at right here. I don't know though for sure. But anyway, we could get held up on this. If you get a rotation off this last expansion level, then we're probably going all the way back here. So we're kind of at a key tipping point in trend based on the architecture. But for simplicity, weekly's long. So let's just kind of come up with a long bias for the moment. Okay, daily's pushing long. Daily looks good. I would say conservative move on the daily would be to at least break the high of this box coming up here, and continue long. If the weekly's in a hold long, we're going to attack this high right here. So I would definitely say that the bias is long for the moment. So I'd stick with that. So go down to the 4 hour. We got a yellow candle on the 4 hour. This seems like it's probably just for the moment. Now this could be what ends up happening is if this holds, it's probably going to be a major reversal. But I would be much more interested to see this rotate long. I'd like to see this come back up long. Look at the what's playing out here, and you can see how these candles are just dirty and whippy. This is very confusing when you're trying to enter on basically just looking at this. But looking at the 15-minute, let's look at the master pattern: expand high, expand low, expand high. Now we haven't broke the expand low point because it didn't go through the liquidity line. It may still go down there, but right here, this is really showing us that this is a key level based on what's already formed here. So what I would look at is, one thing I look for that you want to kind of clear this range right here that's happening with this multi-leg expansion. Get up into this neighborhood, get a new box, let it pull short, and then rip that long right about here is where that would hopefully form. Do I know for sure? I don't, but again, scenarios, just talking through it, and then go long. Right here, this is it's a multi-leg expansion that's happening through here, and that's represented in this whippy candle movement. So if you are going to trade it, I would definitely trade only the lows, trying to navigate that. And then even if this is yellow, really I'd be looking at the bottom of these candles. I would, because this candle is within this blue candle, you know, I would really, you're not going to really know much about the future of this candle until you get to the low or the high of this previous candle. Just the way this is working out, which is reflective of the multi-leg expansion that's going on here. So this one's kind of in the dead zone right now. But for purposes of just coming up with a directional bias, if you're going to get prepared, you're going to get down in the trenches and ready to react to something, I would kind of rule out the downside of the market, the yellow candles. I wouldn't get too hot on the trigger for the short side. Just my opinion. Doesn't mean that it could totally break out. I'm not trying to call the market, but what I am saying is that what would be much more interesting and much easier to hang into would be a scenario where the 4 hour goes long. So I would wait till that starts playing out, because that's going to be in line with the daily, in line with the weekly, and then I would get ready to pounce. I wouldn't really mess with it too much right now. Just my opinion. Okay, and the last one I'm going to go over is pound Aussie. Same thing. Let's jump on the week. Okay. Wow, this looks like it's. Let me look at the monthly for a second. Huh. So we push low here, expand low, expand high, held average price right here. We've already held average price right here, so this is shown it to be significant. Man, I would not be surprised if you get a massive reversal off this and go back to the high right here, like over the next like 3 to 6 months, probably 6-7 months actually, just based on the swing. Huh. That for a long-term trade, that might be a pretty interesting opportunity. And your downside, pretty much you get much below this expansion level, I'd dump it. But your upside right now on a rotation, pretty serious. For long-term traders, based on the framework, that's decent looking opportunity right there. You know, and I would say the overall yearly trend, even though we don't have a yearly chart, is long. So interesting. Based on the weekly, same thing. Look at your rotating possibly off of this level of architecture, kind of goes hand in hand with the monthly. You start to see this pop up blue. Just my opinion. Good opportunity. Rip that thing long. Protect yourself pretty much right under the low right here. Your upside, if you're right on this, your downside is like right here. Your upside, looking at this, expand high, expand low. Where's the expand high point? Boom, right there. So downside to here based on the framework, upside to here. Pretty big, you know, that's a long-term trade though. You're gonna be sitting in this trade for probably a few months minimum. But if you're looking for one trade to, you know, to pull off your next 6 months, there you go. That's a good opportunity. And like I said, I have no idea if it's going to work out, but we have the sensitive price levels based on the ATS framework. You know, if you want to explore that opportunity, there it is. Okay, so based on that, weekly, for right now, weekly is short, but I kind of feel the same as I do with, I forget now, I've gone through, whether it's, there was CAD yen or Euro yen, one of the last ones, we were talking about the weekly seems exhausted. Based on what's going on here, it seems like the weekly's getting kind of exhausted, doesn't it? So, you know, it's, you know, if you're again, I'm not to repeat myself too much, but if you're looking at this and you're in a short trade, maxed out on your leverage, you know, I would say that's a pretty dumb idea right now. I would say that's definitely not a good idea, because you've had, based on color change, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 consecutive weeks to the short side. If you were just going off candle color, trading the hour into the weekly. In fact, let's look at that real quick. Let's see just how many opportunities the hour into the weekly based on the basic strategy. And I do know we try to go especially on the lower time frames. You want to wait till you're in favor, like you're pulling away from expansion. But if you're trading a weekly, you can, because it's such a significant time frame, you can trade just based off of the candle color if you want. So you knew that it rotated short right here. You just need to be aware of what you're doing. How many times, how many longs do you guys think worked out above expansion in this 14 weeks? Guys, how many? How many buys worked out? Do you guys think it was 10 buys worked out? Do you guys think it was 50 buys that worked out? Or do you think it was one? How many, guys? Type in how many buys worked out before I go look. So Maria said no. I'm assuming you mean none. Joe said 0. I'd say you're on track, Joe. All right, so the consensus seems to be, okay, Lee says 14, so we're going to test that theory. Maybe on the shorter time frames. But overall, we'll see. Okay, Imromar says 1. Rick says nothing. I'm feeling more like where Rick's leaning personally. We're going to test it in a minute. Come on, guys. I need a few more answers here. Frida says everyone's good short. You know, I'm gonna follow your advice. All right, guys. So let's go see how many longs worked out. Okay, so we had the rotation on the 5th. Here's the 6th. So here it is. Here's our rotation coming down through here. Probably your grade A opportunity was this guy right here, fresh out of the box. Boom. This was your leg into the rotation. Okay. Now notice that since this is a 1 hour into the weekly, you do get extended moves. But notice that every single one came back to the origination point, even though this extended big, right back, boom. See how this crashes right back into that. So they can travel. And there are some short-term opportunities. Like if you're trading the 5 into the 1 hour, these moves up right here, there can be some opportunity in that. But what won out overall over the course of 14 weeks? The short side of the market, right? So let's go through it. 1, 2, 3, 4, right back. Now we held. See right here? This we're talking about dealing with it in real time. Came down, held average price right here. This could be a possibility you're going to get an extended reversal. And you did, because it held the framework right here at the bottom. That was a clue that this could be happening. Came up. Let's say you take a loss on that one. You get stopped out right here, but you get a huge move up. At this point, you could be asking yourself, as you're watching this go, is it changing the fundamental direction of the weekly? No, you're still yellow over here. And you see this reaction to this past framework right here? Expand low, expand high, expand low. Significant point, turning base off that general area. Can you short right here? Absolutely. You're still short on the week. Until that week turns blue, everything goes short. It may extend out, it may extend the pullback, but it all ends in a predictable manner short. Boom, through here, you short it right here. Got to get through this guy right here for the progress of the trade. Boom, push through, hold, boom, right back down to the origination point down here. Now we're back in the game. Short, 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 and then you have another big explosion to the long side. But no real yellow holding. There's not really any rotation. You can see this is just straight momentum to the long side. Maybe you get stopped out on this. Maybe you do. But it does come all the way back up. And if you're watching the weekly, as long as that weekly doesn't change, As long as this weekly doesn't change direction, where are you coming back to? Origination point, like a rubber band. Rip all the way back down. That's the power of the stable direction and the directional bias. All the way down. It keeps going. Short, 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 short. So you guys might be asking yourself this question. If something has the potential to trend for 14 weeks in one direction, why would you, number one, why would you go long, especially on the first rotation when you get the grade A signal? Not to say the grade A signals don't fall apart because you're at that tipping point of the turn, but if they hold, especially pairing it with a time frame like the weekly, you guys had 14 weeks of opportunity, of conservative opportunity, even just trading back to here. You're above average price, right here, rip it, close right here. Real conservative, just close at the white line. They all rubber band back to the short side. So there's enough opportunity in there over 14 weeks that you guys should be able to get something out of it using these very basic principles. And you have the framework to give you the clues in real time on how to work with it. And you have the profit targets based on the rubber band action that comes back to those origination points. So anyway, I don't really know how to make it much more basic than that. I know it's harder. It's easier said than done. But keep yourself grounded in the higher time frames. Something I used to talk about a long time ago when I used to do private coaching calls. The higher time frames are your biggest friend because they simplify your life. They make it to where you don't have to worry about, is it going long, is it going short, and you're trying to go through, figure out what's happening all the time to get every move. You let the higher time frame guide you. That the stability is 14 weeks of consistency. 14 weeks. You're talking about a significant part of your year. Consistent. So, guys, it's just anyway, try to keep it simple. Again, I know it takes practice, but you guys, between the tools that you have here, it should be pretty straightforward overall. Guys, I'm going to wrap it up on that. That's pretty much what actually, you know what? I apologize. For Josh, I'm going to look at the original one was pound Aussie 4 hour into the 15. This 1 hour actually looks like it's setting up for another rip to the downside based on the weekly. So this is pushing up. You can see we're still just in this general range based on the weekly. This really hasn't had a lot of opportunity on the 4 hour. I think the 5 minute into the 4 hours probably had some more opportunity because there are some opportunity in these short-term movements. But remember, as long as that weekly stays yellow, everything's coming back to zero. Man, this is just nothing more than a long pump and a dump until that weekly turns color. That's the facts. So regardless of the noise that happens right here, boom. So, this is going to fall apart at some point until it breaks a weekly. So that being said, right now, would I be long-term holding? What you're saying right now, if you're long-term holding a buy, you're saying that the weekly is over. I'm done. I'm going all in on buy. So that's the call that you're making right now. Other than that, I don't see really any great entry opportunities on the 15. That's why I say play around with the 5. Let's jump over here and see what kind of opportunity. By getting a little bit tighter microscope, you can see it gives us more architecture right here. Same thing. Blue on the 4 hour, below expansion, find your strong entry point. This one was kind of wiggled you out once here. So here's your grade A signal. Boom. Below right here, taking out this liquidity line. That's where you get it. You buy right here. You get stopped out right here. It's okay. You buy again right here. It was just another stop taking move by the market makers. Rip it right here. Now you've legged into the trade over here. That was it. Same thing. Below expansion. Boom. Leg in. Take some meat out of it. So there's much more opportunity on the 5 than the 15. So, you guys, you may want to run a 5 and a 15 while you're watching the 4 hour to see the framework. Now it can get a little confusing because there's a lot going on there, but anyway, just it's up to you guys. You guys explore that, and you guys can see how you're working there. So Eric says, take a look at the expansion index. I'll look at that. I haven't really talked much about these. One thing I don't really talk much about the expansion index is that I've looked at this stuff so long that I can see the phases. So the expansion index is more of kind of a beginner analysis tool to help you guys keep in the right mindset and remember, what's normals are. But every time when I look at a chart, I glance over the whole. I don't look at the candle that we're on. I look at the candle that we're on, and I look at like this last section of market, just to get a sense of where the flow is. So I kind of naturally just kind of look at that. And so I apologize, I don't talk too much about the expansion index sometimes. I'll work on that. But right now, the expansion index, if this is going to go long, right here, this is the expand high point right here. You basically, for this to turn into anything really significant to the long side, you got to break the expansion index on this last long leg right here. So, that's pretty much where it needs to go for your expectation. And then if you're riding these, on the 5 minute, the last long expansion you had was from right here. This one drove you. You can see these kind of never really made it there, but you were in the money on them. And then this one, boom, drove you in, and you can see that one really pushed. And so you'd be covering somewhere up in here, based on if you legged into the trade right here. And that's what it's for. It's just to get you, when you get through that average line, now you're like, okay, this is, it's giving me I'm above average of what the general volatility has been. So, but anyway, remember, start with your weekly for your currency pairs you're trading and see what's the weekly feel like. If the weekly's short, just figure, regardless of how big the move is, until that weekly rotates, everything's going to come crashing down. So if the weekly's long, everything on the short side is eventually going to be a sucker's move, because the weekly's going to win until it rotates. Simple things like that can keep you guys from getting crossed up, going long, going short, going long, spreading your liquidity all over the place. When everyone else feels like it's a reversal, you're like the wolf in waiting. You're waiting because you're grounded in that higher time frame, and it's just the bigger the move against the higher time frame, the bigger move coming back. So I'm gonna leave you guys with that. Thank you guys for being on. One thing that I just got a notification that this session stopped recording about 10 minutes ago. So I apologize if you guys want to watch it. It looks like we ran out of space. So I need to delete some of the old ones that are stored on the platform. I didn't even know that could happen, but apparently it can. So this webinar probably will cut off about 10 minutes ago when you're replaying it. So I apologize for that, guys. Other than that, everyone have a great day, afternoon, evening, wherever you're at. And we will plan on seeing you guys next week, Tuesday at 10 a.m. Pacific Standard Time. Until then, everyone have great trading, and really appreciate you guys being a part of our trading group here, and look forward to hearing about more great success stories. And if you guys need any help, always feel free to email us at support@TradeATS. Thank you guys so much. Bye.